For years, crypto has felt like the Wild West of finance, right? Well, that's all changing. We're going to take a look at how 2026 is shaping up to be the year the rulebook doesn't just get written, it gets enforced, and it completely reshapes the future of digital money. Okay, let's get into it. We're starting with this quote because it just perfectly nails the huge shift in thinking we're seeing. For the longest time, the industry looked at regulation as this big wall. But now, as Matt Blumenfeld from PwC puts it, it's literally the foundation, the architecture, that's going to let crypto finally grow up and plug into the global financial system. And that's really the heart of it. By 2026, the whole conversation around crypto rules is just no longer a what if. It's real, it's happening now, and it's having a massive impact as we speak. So let's dive into our first section here, regulations inflection point. Because we are at this incredible moment where we're moving from just talking about the rules to actually living by them. This slide just lays it out perfectly. The past was all about designing policy, endless consultations, and just a ton of uncertainty. But 2026 and beyond, that's all about implementation, real supervision, and a whole new level of confidence in the market. The debate is pretty much over. The real work has begun. And if you want to see this in action, look no further than stablecoins. This is where we're seeing global agreement finally start to click into place. After years of debating, and let's be honest, some pretty spectacular blowups, the world's major financial hubs are basically on the same page now. They all agree if you're going to issue a digital dollar, there have to be some serious ground rules to protect people and the entire financial system. So, what are these rules everyone's agreeing on? Well, they're the bedrock of trust. First, full reserve backing. That just means for every digital dollar you issue, you better have a real dollar in the bank. Simple. Second, you have to be able to get your dollar back one for one anytime. Then you've got common sense rules on keeping customer money separate, having clear governance, and of course, super strict anti-money laundering compliance. And look, these rules aren't just abstract ideas on a page. They have a very real purpose, making sure that digital money in your wallet is actually backed by something tangible and verifiable. It's about moving from a system based on trust me to one based on show me. But who's actually making all this happen? Who are the architects drawing up these new blueprints for global finance? Let's meet them. You gotta think of this as a two-level process. At the top, you have global bodies like the Financial Stability Board, or FSB. They create the high-level blueprint. Then, you've got the regional players, like the European Union, who take that blueprint and actually build it out with super detailed laws, like their famous MiCA regulation. The FSB is a really big deal here. It's basically the coordinator for global central banks and finance ministries. But what's crucial is that their job has changed. They're not just writing recommendations anymore. Now they're actively checking to make sure countries are actually putting the rules in place. And to see just how real this all is, you only have to look at the EU. This timeline shows that their MiCA framework isn't some far-off idea. It became law in 2023, it's fully live at the end of 2024, and by June 2026, that's the deadline. Every single crypto firm in Europe has to be fully authorized. The clock is absolutely ticking. So what exactly is MiCA? Well, you can think of it as the first ever comprehensive rulebook for crypto in a major economy. It creates one single set of rules for the entire EU, which gives companies total legal certainty and a kind of passport to operate across all 27 countries. It's a huge game changer. Now, all this new regulatory clarity is having this really fascinating, maybe even unexpected side effect on the market. It's creating something people are calling co-opetition. This quote just sums it up perfectly. When you have clearer rules of the road that everyone agrees on, the shared rails, it actually frees companies up to build better, faster, more innovative things on top. Regulation isn't killing competition, it's building the runway for it to finally take off. And that's co-opetition in a nutshell. It's this idea where fierce rivals, the big old school banks and the nimble little fintechs, actually work together on the foundational stuff. They cooperate to build a bigger, safer, more liquid market for everyone. Let's break down exactly how it works. Step 1, the regulation itself creates a level, predictable playing field. Step 2 is the co-opetition zone, where everyone collaborates on the basic plumbing. But step 3, and this is the really cool part, is the competition zone.
This is where those firms turn around and fight tooth and nail for customers by building amazing products on top of that shared foundation.
All right, so with all these pieces falling into place, what does this new financial landscape actually look like? What happens next? Honestly, it's as simple as that. The foundation has been laid. The runway is built. All that uncertainty that kept the really big institutions on the sidelines for years is finally starting to evaporate. Now the industry is poised for a massive new wave of growth. Only this time, it's happening inside the lines.
And you can see it happening already. Regulatory clarity is creating institutional confidence. The big banks are jumping in with both feet. The whole idea of tokenizing real-world assets is moving from little experiments to full-scale projects. And maybe most important of all, real consumer protections are being baked into the system from the ground up. This is what crypto growing up looks like.
Which really leaves us with one final thought. The rulebook is written, the players are finally on the field. So the question is no longer if digital assets will be part of mainstream finance, but how. The race is now on to see who can innovate best inside this new framework. So what's going to be the winning play?